So that number on the net interest income, what was behind that beat? Were you helped by the interest rate environment?
No, we were helped by higher activity, higher business activity that has led to lending growth and basically more business in the quarter. So that has actually started quite promising.
I take it that from the top line that you've given to us today, I want to get a sense. You talk about drastic measures, or we've referred to drastic measures that you've taken at the bank. Are the worst of those drastic measures passed? You'd had announced 6,000 job cuts and a hiring freeze. Has the worst of the reorganization passed?
Yeah, we have started to execute, as you say, on the new business plan, and after the first quarter, we are proceeding as planned. Business activity increased and cost went down in Q4. We have also completed the main organizational changes to support our strategy. So it's early days, but I think it's fair to say that we have seen promising signs in Q4.
Frank, when will you return to positive operating jaws?
We are proceeding towards our 22 targets. We have a plan for that, and we stick to that. We are determined to deliver on our financial target, which is a return on equity above 10% in 22 and a cost income of 50.
Can I ask you, you said that actually momentum in the business had improved when Nera questioned you about the top line, and you said it wasn't really to do with rates. So I just want to dig a little bit deeper there. Sweden obviously ended 5 years, half a decade of negative rates. Do you welcome that? What difference will that make to your bottom line? Or is there a bigger risk with ending negative rates in your view?
Yeah, that's a very good question. I think we have learned to handle the negative rates. Of course, it doesn't help us. One of the, you can say, the three main engines we here as a bank have, the deposit engine is basically going backwards, and that of course is not helping our income growth. But we've learned to live with that now for 5 years, and then we also have different price mechanism that has been affected or that has been started. So I think at the moment we are where we are. We don't expect any help from the interest rates for the coming years, and we just need to adapt to such an environment long term, and that is what we are doing by increasing our operational efficiency, by drive income initiatives, and then create just even better customer experiences. Then you have the general question, of course.
Yep.
What will happen with negative interest rates, or what will happen? What is the societal impact having negative interest rates? But that is a very good big question.
Frank, you said this morning that we're heading in the right direction, but a lot of work remains. So in terms of the work that needs to be done, what are you prioritizing in the next quarter?
Yeah, it's a little bit longer game than a quarter, but of course we as I mentioned, we have three priorities that we stick to, and that is to improve our operational efficiency, basically questioning all things we do in the group, and that has started. For example, we have in the last quarter we have had 70 cost initiatives to make things smarter, simpler, and more efficient. We have closed nearly 80 account products, so a lot of things is going on. Then it's about increasing our income base. And an example of what we did in Q4 was that we grew our business. Our mortgage business is growing now in all countries. Our SME business is growing very fine. And then we acquired SG Finance in the latter part of December.
Frank, I just want to get your perspective for the landscape of liquidity and bond trading. I was reading what your head of wholesale banking was saying. 20 years we've had positive carry, buy the bonds, hold them, ship them in. That landscape has changed. What's the biggest risk to global or to European bond trading from the shifting dynamics of rates?
Yeah, it is a different ballgame now, and that we just need to adapt to, and that is what we're doing. So you can say our large corporate institution, what is called as it's called now, is going through a clearly repositioning, and one of the questions, of course, is how to handle an inventory where we've been used to having a positive carry, which is not the case anymore. But that's just a part of running a bank at the moment, and that of course we are facing and fronting and will handle.